Good morning. It's Thursday, August 28th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So it's shaping up to be another busy morning here. You got silver up 1.1% here in Citigroup. They said that the U.S. premiums for silver and palladium are underpriced. They're saying that they're just currently 2 to 3% premium to ex-US pricing. Basically what they're doing is they're comparing the price of silver and the price of palladium to other outside countries here, and they're looking at the differential between them. So they believe that it is a potential for some tariff risk. So you're seeing a bit of inflows into the silver market with that September contract, which we're not really quoting anymore, but because of the fact that the December contract is now the front month, but you could see that it's up 42 cents here, trading at 39.11 on the September contract, and then finally the December is at 39.60. We'll want to keep an eye on where spot prices are at as well, because of the fact that we are going to continue to roll forward where you already see the March contract over that $40 an ounce, creating a false fallacy that we're already achieved that level here. Our outlook on silver has been quite optimistic, and we believe that once prices can break through that $40 level, we should see a move up to the $41 to $43 level here. So a lot of traders are looking at farther dated option plays going out into that market here. So stocks, if you look at them, they're set here to pause here. This comes after yesterday's fresh record highs. We get NVIDIA, they get a series of price target hikes here. We're seeing upgrades from JP Morgan, Citigroup, and Morgan Stanley. The dollar has been down for 3 straight days, helping boost a lot of outside commodities. We're seeing gold futures trade back above that 34.50 level. That's been old resistance here, not necessarily new support. Really, your support levels are much deeper and lower here in the market, but it does show you that the direction of that gold market has been slowly marching higher. Now, can it break through some of these all-time highs and recent highs when we had that tariff threat on Switzerland's imported gold? Will we be able to break out above that level? That's one of the key resistance points we'll want to see. What you want to do is really look at a daily chart of the gold market. You can see that the market has been in this giant kind of wedge pattern here for quite a long time since those April highs. Now looking at the oil market, it's dropping on concerns that the market is moving into a surplus here. I did print out a report that was put out by Goldman Sachs that was looking at making the case for oil in those low 50s here and even sub $50 oil. And then you got yields are continuing to slip ahead of the GDP data and the initial claims. Those are two of the things that we're going to want to watch here today. You look at the markets here in the pre-market movers and you go over to Europe and Asia. Well, European stocks, they were steady. Asian stocks, they were mixed here with the MSCI just a little unchanged. Snowflake's up about 14% in the pre-market. NVIDIA down about 1.5%. If you look at 10-year treasury yields, just slightly lower here on the market. And then you get into the dollar index. Again, that's what we've been focused on here. Down about 30 basis points at 97.83, and the euro getting a bit of a boost here at 116.82.5. The euro currency actually yesterday reached a multi-month low here before getting this pop. And you look across the board, all the foreign currencies are higher. The Japanese yen, that's been your weakest market here, sitting at 68.19.5, and it's been one of the targeted shorts. So really, it's been natural gas and the yen are the two markets that a lot of the people that are playing the downside of the market, in addition to copper, have been those short targets here. You go over to the gold market, again, 34.54, silver up 40 cents. September again, 39.11 here. Seasonality in options activity. You look at the options, something to note is that the dealers, they are long gamma, which means it creates conditions for lower volatility. Basically, they're buying the dip and they're selling the rip here on these markets. As they get closer to their strikes, they're compressing volatility. Now you go into September, and this has been a lighter volume week here where you had the NVIDIA event. A lot of people are going to be done for the week on trading, and then you come in tomorrow where you get the core PCE data coming out. That should create some volatility, and the volatility should be a little bit greater than what is anticipated because of the fact that so many people are gone. They're on vacation here, but since 1928, the average decline for September has been about 1.1%. You shouldn't take the average of things, and remember that past performance is not indicative of future results. After that, you come into October, November, December, and January, you tend to see the returns on the S&P continue all the way through because of that seasonality here. And if you look at some of the seasonals here, you come into the end of September and you go into the gold market, up about 12 out of the last 15 years, where you look at gold all through the end of September into October. You go into the S&P 500, well, from the end of September all the way into about the second week of December, been up about 14 out of 15 years. And finally, the Russell 2000 end of September, going on through the end of November, that has been up as well 13 out of the last 15 years. Past performance, not indicative of future results. And with the administration that we have, anything can happen in these markets here. So note that here, in any kind of tariff, anything can drive these markets into a crazy tailspin here. So not bearish on the market, just giving you some of the backdated seasonality data that has come out. You look at the ETF flows, well, gold up 11% year to date. Exchange traded funds, they added about 218,000 troy ounces of gold. I anticipate that was a lot of short covering here and a lot of breakout buying as we got over a recent resistance point. You look at the silver market, up 12%, but they did cut about 135,000 troy ounces of silver. I talked about in yesterday's video where a lot of people, when you get to a high end on the charts, just looking at the charts, not the price action here, and you have to roll over contracts, what they'll do is they'll try and time the roll. They'll sell one, they'll wait for a dip on the other one, or they'll just sell and they'll move on to other commodity markets. Remember, a lot of people that trade these markets, they don't care about the fundamentals of silver or that it should be trading at $50 or even higher. They just want to be in whatever market is moving. And when you've got Bitcoin here forming a bottom and starting to turn back up, that could be where they're going. Or they could be trying to play some of the activity, some of the trading activity in the NASDAQ, or they could be reducing their positions, anticipating some type of a market risk event. So you guys got any questions, reach out to me, send an email to info@bluelinefutures.com. And remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.